What we're going to do a bit on today is one of my favourite trades, but one of my favourite trades that went wrong this morning. And we'll have a look at why and some of the clues that came up as to why this didn't work. So trade you're looking for is what I call a caught in the hole trade. This is a trade that comes about where you get generally a relatively large day. It doesn't have to be a huge day, but it's a day that closes a long way out of value. So you got the close down in the Dax yesterday, down at 12,223. Values all the way up here, or the lower values all the way up here at 80. So we've got pretty big discrepancy between the two. Now the trade that you're usually looking for, or the trade that I'm looking for on this, is basically the idea that people who've sold it late have just sold it into a hole. They've got dragged down with the S&P, they've sold it down there, and perhaps they shouldn't really have got themselves short all that way down. Cash closed in the Dax was up here. Somewhere around here. So we've not done loads of extra distance, but you've done a little bit more distance. So everyone who's short after the cash session is now going to be sitting there thinking, right, this needs to go down. Otherwise, they're in a pretty dodgy position. They're short right at the bottom of the previous day without value shifting. You look where the VPOC is, it's way, way up. This is caused predominantly because of the fact that you got the ISM number and that dragged the day down. That creates this sort of double distribution effect. So it's not an ideal caught in the hole. The ideal caught in the hole, all the volume would be up here, and then you'd have this stretched out move and you wouldn't have this volume that we're seeing there. So it's not ideal, but nonetheless, we are closing away from value. And so you'd be looking for, come the 7 o'clock open, a reaction where you can buy for a move straight up, looking for the market to reverse back up towards value. So when we open here, that's the kind of move that you're looking for. Break 12,246, and that then should take you right the way up towards 12,280. That's the trade you'd be looking for, and the crucial part of this is whether we can break the 46s. In terms of taking this trade on, we open a fair bit higher. So we open up at 34s. So that wouldn't be the ideal situation to take the trade on, because the sort of criteria for this trade is you're going to buy the open with your stop below the low. That's giving you a 20 plus tick stop. So what you'd be more likely to be looking for is any kind of movement down towards the close, down into this zone here, and that's your opportunity to buy. It minimises your risk, and if this trade is going to work, we shouldn't be breaking the lows. So early on, this trade does work out. If we look at a 5-minute chart, from 7 o'clock we open, trade down towards the close, and then start to drift back up. So it's looking like the trade may well work. Those who sold it down here have once again not got their continuation. And if we start to drift back up, they could then all start to run for the exit because they've managed to get themselves caught. So the important thing here is maintaining your stop below the low, and then we're going to have a look at what happens when we do break the low. The one thing that put me off this trade though, and I mentioned this this morning, was correlated markets were not suggesting the same kind of trade was on. So this was more a case that it was the DAX on its own that was looking for this caught in the hole type scenario. And that's your sort of big clue as to this not working, or at least you not going aggressively into this trade. Taking the, buying it down here where you stop below the low is still fine. You're taking a relatively small risk on it to then try and play for that move back up. But if we go over and have a little look at the Eurostoxx, so this is the Eurostoxx, same move down. From yesterday, we opened with a gap up above the highs, dropped down into the close. But unlike the DAX, the Eurostoxx did drag value down into the bottom half of the day. Closed towards the low, closed inside value. So that's now giving you a bit of a clue that you don't have the correlation from the Eurostoxx that's likely to cause this bounce back up. On top of that, the open in the Eurostoxx turns into an open drive and the market moves straight down. So this is giving you an indication that there's no real willingness to buy this now. This is more an indication that, you know, early on, first hour, people want to sell it. So your next big question is what happens during the cash session. So they're the two main elements of this as to why it's perhaps not going to work. It's predominantly to do with other markets not adding up to the same trade, and also this not being a sort of perfect caught in the whole trade. We have managed to shift quite a lot of volume down. It's more a double distribution type of day. And so the point being here, don't get yourself suckered into a trade because you like the look of it when it doesn't match all the criteria up. This looks reasonable for a caught in the hole. I'm not suggesting that you don't play it, but I think it's one to be played with a little bit more caution than you might on another example where you try and play that aggressively, buy it straight off the open for that move up. That would be a situation whereby this move had come very late on very little volume. On top of that, as I say, Eurostoxx was not indicating it, and neither too was the S&P. If you go and have a look at the S&P chart, you're also getting clues there. So we've established that this is not necessarily the greatest caught in the hole to go for. And then on top of that, you get Eurostoxx having closed down in this range 35.09s to 34.97s. We then open an open drive down towards the lows of the previous day. Now, adding a little bit more to this in terms of overall structure, and not a reason to discount the caught in the hole, but potentially a reason to be more aggressive on the reversal or the sell through the low as that caught in the hole fails. What we've got in the DAX, the last or previous day, we got a bad low. Middle of last week, bad lows as well. These were down at 12,127. So they're then going to become a target. This whole move as well, going all the way back to the end of August, has been very much a pretty poor move up in the sense that it's been done on gaps. Big obvious gap coming in here as well at 12,042. So that's your big obvious gap. So you've got relatively poor structure on this move higher. Gap, 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 gap. So we've got numerous gaps that need to be filled back. That adds more reason to be thinking that this market could well fall and that we could well see a continuation to the downside. So you've got a bad structure, you've got Eurostoxx not adding up to the caught in the hole, and you've got a not ideal caught in the hole scenario either. So all this then should be giving you a little bit of a sense of, okay, well, if that caught in the hole is not going to work, what's my other option? Is there a way of getting on the trade to the downside and managing to get yourself short to try and play for at least early on 12,127, and beyond that you can then be looking right the way down towards this gap close down at 12,042. So that's the situation. What you've also got, sorry I didn't point this one out, you've got 12,078, which is just where we've managed to reach down to. We've just managed to push through here to 66s. But so far today, that's where we've managed to get down to. So this is a second day trend that we're seeing in the DAX at the moment. So how could you have got into this? Where could you have executed this trade? So I'll bring you on now to a 1 minute chart. And we're going to look at the actual specifics of that initial move down. Remember, your target on this is going to be down here, 12 127s. So how do you get onto that trade? Well, your big clue here comes from the break of the initial balance. So here's yesterday's low. The initial balance low stops around about a tick off the prior day's low. So you've now got a low that's been tested 3 or 4 times. Not a good low at all. So that looks primed to break. What you've now got to decide is when you're going to get into this trade. So we get cash open, and we open somewhere just around up here, and we start trading down towards the lows. Your big opportunity to get into this trade is just in this little box here. We didn't shoot through the low, pushed through the low, and we got into this sort of 10 tick zone. What was very interesting about this though is delta increased in the middle of that zone. So that would be a little bit of a worry if you're taking a short on. However, as long as we're below that initial balance, below the previous day's low, this short's valid. And these buyers, so people who are then trying to buy it just below that low, try and stop it falling, if it starts to turn, are then in a lot of trouble. So you've got a 10 tick sort of uncertain area here, that if you're looking for a short, and if you're looking at the other clues, the Eurostoxx is already starting to fall as well at this point, you could be looking at this and saying to yourself, okay, as long as I keep my stop above this zone, so back above 12,215, I'm okay. And what you then get is this tip, big drop in delta. This is sort of 5 minutes in to the session, pushes it straight out of that zone. As soon as that zone's broken, then the move's on. And then it's just a case of sitting in this move, letting the move go and letting it get down towards the objective. So this gives you a full 90 tick move over the course of around about half an hour, and you even get a nice splash down at the end to give you a chance to get out. Very typical of the end of a move. Highest volume, 1 minute candle, big drop in delta and big wick. This is all a case of we get through the 12 127, you get this fast stop out through the low, and that's then your reason or your chance to exit the trade. That's your chance to get out on that splash down. You've achieved more than the 12 127s that you were looking for, and then you can exit the trade. The alternative to that is if you want to try and stay in this trade, you want to try and just hold on to the trade and maintain your position. And so this then brings me on to a moving average strategy. What I've got on here is 2 20-period moving averages, an adaptive and an exponential. Looking to use those to stay short. That as long as the market's staying below them, you can maintain that short position. What this does is, if you're looking to try and play it through 27 and potentially for a further continuation, you can use those averages and trail your stop behind them. It's a good method of making sure that you don't get caught into snatching trades, that you don't talk yourself out of a trade when it's perhaps not flowing as quickly as you'd expect. Take this area here, after the initial 5 minute drop, which takes you down from 12,215s down towards 12,160s, you could be looking at that thinking, well, that's pretty decent. I've got a 50 tick move here. Maybe I should be getting out of this trade. If you use a moving average though to try and keep you in, it allows you to just sort of step back and get over that sort of willingness to snatch the trade, to sort of say, no, I'm going to take it, I'm going to take it, I'm going to take it. You don't need to. Yes, you're going to give something up if you move your stop up or if you trail your stop, but you're giving up a small amount for the possibility of completing this move down. There's still another 35 ticks in this, and that ultimately is the target you were looking for anyway. So what it does is it maintains your conviction for you, or allows you to give yourself a point where you can sort of give yourself a stop where you can be comfortable and say, yep, I'm happy if I get stopped out there, because the fact I've used a tool to manage my expectations, rather than use your own sort of fear of it turning back on you, which is often, you know, something that a lot of people talk about. They're like, oh, I was worried it was going to rush back on me, so I got out. Or the whole, it's slowed down, I'm not so keen on this anymore, I'm going to get out. Ultimately, remember, you're looking for this 90 tick move. So don't let a bit of slow trade and your own sort of thoughts on things change your initial objective. Your initial objective was 90 ticks, go for them. Sit with it until it gets there, and you can use other tools to help you then maintain that trade. So what we've looked at today is the failure of the caught in the hole trade. So once that's happened, once those people who sold it late on get the break of the lows, then that's going to bring in more sellers as well. Those who'd sold it late on yesterday are emboldened, and then you're going to get more people come in further down as well. So that was the key execution area of this trade. It's then a case of how you stay in the trade as well. So something to be thinking about. Moving averages on short-term charts can be a very useful method to do this. It maintains you in a move as long as it's trending in the short term, keeps you in that trade. Incidentally, what we did then see is another low achieved in the DAX, and this has then continued onwards down, and we are currently trading down at 12,065. So we've done another 60 ticks on from where we finished this one up just here. So very much a trend type day in DAX. We're sort of shifting volume down and down and down throughout the day. This is another day that you'd be expecting to close relatively close to the low. Next target at least 12,042.